Hi everybody, welcome to our discussion on this topic that is leases. Friends, so far we have talked about several instances and about understanding more about the lease and the lease accounting. What we would like to do is basically now look at reassessment of the lease term and reassessment of the lease liability as well. When, for example, the change in the lease, the change in the scope of the lease results into reduction of the scope. All right. So we've done some calculations. I'm going to explain those calculations, but before that, let's look at the information that results into these calculations. Right. Here we are given that my original lease term is specified at 10 years. There is a space on rent. For example, there are two identical floors taken in a building and the rent is payable at $50,000 per annum in arrears. That would be, let's say, towards the end of year, and the original discount rate is given at 6%. Okay, so looking at this information, what we are saying is this is how my original schedule of lease rent would come at. So I've taken this 50,000 per annum at the end of each year. Okay, and all these cash flows are discounted to arrive at their present value at the rate of 6%. All right. So this stands at 368,004. Is it okay? So the one thing that we do on day one is, of course, we say we recognize right of use asset at 368,004, and we also, of course, recognize corresponding lease liability of the same amount. Is it okay? Yeah, quite logical to do that. That's our first accounting. Right. Now, the right of use asset, the right of use asset is depreciated over next 10 years. Is it okay? So we never assume that there would be a change in the scope of the lease term. So we are saying that my annual depreciation would happen at a straight line method over next 10 years. Okay? And basis this, so one is the accounting for the right of use asset depreciated over next 10 years. My annual or my accounting treatment will be debit depreciation credit right of use asset. My annual accounting would be 368,000. Right, I've just taken 1 by 10 value of that. Is it okay? Yep. Now on the lease liability side, this 368,004 will become my opening balance. Okay, and I will recognize interest cost at the rate of 6% per annum here. Okay, so for example, this entry which was recognized, I'm now going to charge an interest of 22080, which is the approximate 6% interest on the opening balance. So I'm saying debit finance cost credit lease liability, which is 22080, and this takes care of my accounting for the interest payment or interest expense specifically. Now I'm making up overall payment of 50, so that would certainly reduce my lease liability to the extent of 50,000, and I will reduce my bank account to that effect. All right, and that would give me a, let's say, closing balance for year 1 amounting to 340085. I shall do, and I continue to do the similar calculations for the entire tenure, but it is mentioned at the end of year 5 when my total liability is 210618, there is a modification in my lease. Okay, what does it specify? At the start of year 6, which is of course the end of year 5, the lessee exits one floor but continues with the other one. All right, and the rentals payable are now 30,000 per annum, and I'm also given the interest rate when I start making first payment, which is the start of year 7, is at 5%. Okay, so what we are now looking at, when we are exiting that lease of one floor, we have a revised lease schedule, right? So for year 6, I'm going to pay 30,000. Likewise for 7, 8, 9 and 10. So from 50 it has gone to 30, but of course we have exited half of the space, right? Now, there are two things that we need to consider here. One is that, so I do not probably require this here. I would probably want to keep, or I don't even require this, it doesn't matter now. So what we are saying now is the total asset of 368004, the right of use asset that we recognized originally, we need to de-recognize 50% of the asset at year 5 end. Logical to assume? Yep. And also the lease liability of 50% on the same date. Okay, right? Moving from 2 floors to 1 floor, of course we need to de-recognize both the asset, the right of use asset, and the liability. All right, so what we are saying now, out of this 368004, I would say 50% is gone, but of course I have been charging depreciation annually also, right? So if my original lease term is 10 years and my revision happens at the end of year 5, is it okay to believe, is it okay to assume safely that my carrying value of right of use asset is half of this value? Right? Is it okay? So what we are getting here is the value of 184002. This is nothing else but the carrying value of 2 floors here. Okay, right? And then now we are saying when we have got these 2 floors carrying value, since one needs to be extinguished, one needs to be de-recognized, we are saying credit right of use asset, which is 50% of 184002. Now this comes to 92001 on this date. Is it okay? Yep. So I've got this value. So I'm de-recognizing that one floor's carrying value as logically as it should be because I'm exiting that floor. Likewise, my liability which stands at 210618, which pertains to both the floors, out of this, half shall be de-recognized. That will be 50% of 210618. That comes to 105309. All right. And of course, since we are exiting an asset, de-recognizing an asset and also de-recognizing a liability, the differential, my debit is higher, so I would need to recognize gain on de-recognition in this case, right? So when we say we are exiting such portion, when there is a reduction in the scope of leasing and accordingly there could be a gain or a loss, that shall be recognized in the profit and loss account, and this difference comes to 105309 minus 92001. This will be 803. So that comes to 13308. Okay, right? So what we are now left with, of course, the remaining liability. Okay, how much does it come to? Of course, the carrying value is 105309 of the other floor, right? But now I have a revised lease schedule, so the cash flows have changed and so has the discount rate, and this lease liability stands at 129884, which means that I need to revise the value of my lease liability, and that should be shown at 129884. And now what we are saying is, since there is an increase in the value of liability in totality, I should recognize this differential. So difference comes at 57542. So this comes as 24575. So I would simply say I would recognize a right of use asset and my lease liability to that extent. Okay, right? So what we are saying is, in this case, when the scope has reduced, we shall of course de-recognize to the extent of the deduction the lease liability amount and the assets amount, and any difference between the two will be taken through the profit and loss account. All right, and whatever the difference comes within the existing liability now and the new liability, that difference of course would result into the lease modification, and accordingly an increase in the right of use asset shall be recognized here. Sounds okay? Right, this is something which is a bit different from where we saw an increase in the scope of the lease or an extension of the lease term as against when there is a reduction in the scope of lease here. Sounds okay so far? So this is something that we wanted to cover as a part of this discussion. So thank you very much once again and good luck. Take care. Bye.